Retirement investors have a lot of options these days. You might have a 401k at work, and you might even have a Roth 401k option. In addition, you might be able to put money into a You're not alone. Many employers now, both Roth and traditional retirement accounts, offer tax benefits. The difference is when the money gets ordinary income. Taxes on Roth accounts work in the opposite order. You pay tax on money you contribute, but your withdrawals generally will be tax-free. How can you make these differences work to your advantage? Start by considering how your current tax bracket might compare to the tax bracket you're likely to be in when you retire. If you 401k. That way you'll get the account's tax advantage now when your tax rate is higher. What if your 401k plan doesn't offer Roth contributions? In that case, a Roth IRA is generally more flexible than a Roth 401k. For example, but you do with a Roth 401k. You can also withdraw your contributions type of contribution or the other. You can contribute to both Roth and traditional plans or switch back and forth between them as your career evolves. Consider discussing your options with a financial advisor. A good advisor can help you figure out how to make the most of the wealth of retirement account options out there.